Let me ask you a question. What if I told you that Bitcoin's next all-time high would not be driven by retail FOMO? It won't be driven by influencers screaming 100k incoming, and it won't even be driven by ETFs. Because according to Michael Saylor, that's not what actually matters anymore. And whether you love him or hate him, when Saylor speaks, the smartest money in the room starts to listen. Today, I want to break down exactly what Michael Saylor said will drive Bitcoin to new all-time highs, explain what he really means beneath the surface, and then give you my honest opinion on whether this thesis actually holds up in the real world. No moonboy nonsense, no blind belief, just logic, incentives, and how markets really move. And by the end of this video, you'll have a much clearer picture of where Bitcoin may be heading next and why most people still don't get it. Before we dive in, if you've been watching this and thinking, I just want to understand this market properly and not just guess anymore, I put together a 100% free crypto liftoff course. It costs you nothing. There's no upsells, there's no catch. It teaches you the exact strategies I've personally used to make money across multiple bear markets and bull markets. The same mindset, structure, and approach I use today. You can sign up completely free by visiting cryptowolfpack.co.uk or clicking on the link in the description. All right, let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Before we even get into this theory, we need to understand why Saylor matters. Michael Saylor isn't a trader. He's not a YouTuber, and he's not trying to time the tops and the bottoms of the market. He's a capital allocator. He's the man behind MicroStrategy, now effectively a Bitcoin treasury company, and he's overseen tens of billions of dollars flowing into Bitcoin over multiple cycles. More importantly, Saylor understands something that most people don't. Markets don't move on narratives, they move on structure. And that's the foundation of everything that he's saying right now. Most retail investors believe Bitcoin price is driven by halving cycles, retail FOMO, ETF inflows, influencers, and news headlines. And yes, those things do matter, especially in the short term. But Saylor argues that none of these are primary drivers anymore. It's changed. But why does he say that? Because Bitcoin is transitioning from a speculative asset into a financial instrument embedded inside the global banking system. And that changes everything. Michael Saylor's argument is actually very simple. Bitcoin's next all-time highs will be driven by banks and institutions integrating Bitcoin into their balance sheets, not by traders buying and selling it. This is the part that most people miss. He's not talking about day traders or leverage or meme cycles or alt seasons. He's talking about Bitcoin becoming a collateral, treasury reserve, and financial primitive resource. This is where Saylor's thinking goes way deeper than most commentaries online even give him credit for. He believes Bitcoin is moving into three core institutional use cases. The first is the balance sheet asset. And Bitcoin becomes something corporations hold long term, just like cash or bonds or gold, but with one key difference. Bitcoin has a fixed supply. Even if a small percentage of global corporate treasuries decide to hold Bitcoin, the available supply disappears very quickly. And when supply disappears, price doesn't drift higher. It reprices upwards violently. The second is collateral for credit. This one, in my opinion, is massive and it's barely talked about on social media. Saylor believes Bitcoin is increasingly being used as collateral for loans, for credit facilities, for structural financial products. Now, think about this carefully. If Bitcoin becomes acceptable collateral in banking systems and stops being sold, instead of selling Bitcoin, institutions borrow against it. That removes the supply permanently. The third is custody by regulated banks. This is the quiet part that most retail investors don't see happening yet. Banks don't need Bitcoin to pump tomorrow. They need it to be regulated, custodied, insured, and integrated. Once banks can safely custody Bitcoin for clients, it becomes a default option inside their wealth management offerings. And that is when things will get very serious. Now let's address the elephant in the room. A lot of people are saying, isn't this just ETF flows all over again? No. This is where Saylor's point becomes extremely important in my opinion. ETF money is fast, Tradable, liquid, emotion driven, and institutional balanced money sheets are these things. They are long term, they are liquid, they are strategic, and they are non speculative. ETFs can dump, but banks don't. That is the difference. Now let's get real for a moment. Is Saylor right? The short answer, probably yes, but not how most people expect. And the long answer, let's break it down. First, the supply shock is inevitable. Bitcoin supply is fixed. There will never ever be more than 21 million Bitcoin. Every institution that holds Bitcoin removes coins from circulation. Over time, this creates structural scarcity, not speculative scarcity. And that is a huge difference. And the markets always reprice scarcity. When there's less of it, the pricing gets repriced. The next is the institutions think in decades, not cycles. Retail, most people think in weeks. Institutions, they definitely think in decades. Once Bitcoin is approved internally, it doesn't get sold because of a red candle. That creates price floors, not price pumps. And third is Bitcoin fits perfectly into a broken system. So let's be honest. Fiat is being debased, debt is exploding, and trust in governments is declining all over the West. Bitcoin doesn't fix everything, but it offers an exit for some people. Institutions don't need to love Bitcoin, they just need it to make sense. And increasingly, it is making sense to them. Now, this is important because blind belief is dangerous. Bitcoin adoption doesn't happen in a vacuum. Governments move slowly. Banks move even slower. This thesis is inevitable, but not immediate. Anybody expecting this to play out over the next month is delusional and doesn't understand how it happens. Banks hate volatility. Until Bitcoin stabilizes more, adoption will be gradual, not explosive in my opinion. And that means this is a multi-year trade, not a quick flip for them. Let's be honest, retail still drives tops, panics, and media cycles. That means Bitcoin will remain volatile even as institutions build positions quietly. So what do we do with this information? Here's my honest view. Bitcoin is transitioning from a get-rich-quick asset to a strategic monetary asset. That doesn't mean price won't explode. It means the price explosions will be driven by supply absorption, not hype. I'm not trading Bitcoin like an altcoin. I treat it as a long-term hold, a hedge, and a core position of mine. I trade volatility around it, but I don't underestimate its role in the future financial systems. And if you want to understand exactly how I approach markets in both bear and bull conditions, that's exactly why I built the free crypto liftoff course. Again, it's 100% free and it walks you through the same strategies I've used to stay profitable across multiple cycles. You can join it by going to cryptowolfpack.co.uk or using the link in the description. Michael Saylor isn't predicting a pump. He's predicting a repricing of Bitcoin's role in the global financial systems. And those repricings don't happen loudly. They happen quietly, then suddenly, and then all at once. If you found value in this breakdown, smash that like button. It helps me more than you realize. And make sure you're subscribed because we break this market down properly. No hype and no nonsense. And if you're ready to stop guessing and actually learn how to navigate this market, don't forget the Crypto Liftoff course is 100% free and it teaches you the exact strategies I've used in multiple bear markets and bull markets. You can head over to cryptowolfpack.co.uk or the link is in the description. So let me know in the comments, do you agree with Saylor or do you think Bitcoin still lives and dies by retail cycles? Because as always, I appreciate every single one of you for making it to the end of the video. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.